Yeah, um, good evening, guys. Welcome to my YouTube channel. My name is Isa Kamaldin, and this is the segment of my YouTube channel called the Trade Trends episode, where I come to analyze the forex market and give you guys the potential trading opportunities in the market. Yeah, I know I've been away for some times, but I hit some couple of losses, and I just need to let the market breathe and let the market do its thing. I don't there's no pride in forcing any trades. You just have to wait for the market to do its thing, and then we'll be able to make money from the market. So I'm going to kick off with the USD JPY weekly time frame. Although I'm supposed to go to the monthly time frame as usual, but there is nothing really much going on. There is nothing really going on the monthly time frame. So we are going to kick off with the weekly time frame. So what's this? This is a higher high, this is higher low, this is an higher high, and the market came back here to form an higher low. Although this isn't the best, I'm not going to lie, this isn't the best higher high, because I'm expecting the market to go like more all the way to the upside, but there was a major level there. Like I can't really call um I can't really call this a major level. There was an impact on the market at this particular level before. If I should go over to the to the past, you guys will see that this particular level has had an impact on the market before. So that's why I lined it up with this before the market gets to the level. So that's why we didn't actually have the best higher high, but the market came back here to this support level here. So, and if I should use my Fibonacci level from swing high to swing low, all I can see is I'm just going to, yeah, as you guys can see, it is right on that 0.618 level. You guys know it is a very, very powerful level. If at all the market is going to change trend, it will at least come back to this level here where it was rejected and give us a chart pattern, a confirmation chart pattern that yes, I'm ready to go all the way to the downside. I don't know if you guys get what I'm trying to say. Like, if at all there will be a change of trend, the market will at least give us a reversal pattern. Probably is a double top or head and shoulder. It will at least come and give us a reversal pattern. There is no any of that yet. Although I'm seeing something like a right shoulder, head, and left shoulder, but it hasn't happened yet. Before you can confirm that this is a an a head and shoulder, it will at least take out the neckline. The same thing applies to double top and double bottoms. Before you can see like this is a valid double top, and this is a valid bottom. Sorry guys, you guys know it has been a while on here, so I was just messing up somewhere. So like before you can actually see a market yeah, like there is a double top or double bottom, it's at least have to come and break the leg line before the double top or the double bottom is valid. The same thing applies to head and shoulder and even head and shoulder. So I'm seeing something like right shoulder, head, and left shoulder here. So I can't really see. Before we can say this market is going to hold, it will at least come back here to break the neckline. Although I've done some some fundamental analysis on USD and JPY. So currently the JPY is very, very strong, and we can and with the US dollar it is indecision. We don't really know yet. It is after the election on Friday or Thursday. I by November 5th, I get. So it is after the election. That's when we'll get to know where the market is heading to. So that's it about the fundamentals. I'm still going to come back here and give you guys the fundamental masterclass, fundamental analysis masterclass, and explain to you guys on everything that is happening with the forex markets. But without that, like before that, so as I was saying, so the markets, like This is right on the 0.618 level. You guys know how powerful this level is. So we are anticipating that the market to come all the way to the upside there. But this is this seems like a left shoulder, although we don't show yet. So that's the analysis on the monthly time frame. But I'm still going to go over to the as you guys can see on the daily time frame. That's where we'll confirm our bias, like where we are ready to go at the moment. So this is if I should I don't know if you guys understand market structure. This is a lower low, this is a lower high, this is a lower low. This is actually not the best lower low, because you guys can see it is more or less like a double bottom. The gap isn't like one thing about let me before before you guys can before you read any structure, you guys should cleanse and understand it, like the gap between them. As you guys can see, the gap from this lower low to this lower high. So definitely there should be the same gap from there, from the lower higher and lower low, but you guys see it is not really that much. So like that's why I didn't take any trade from here. I was feeling suspicious, and there was a support level here. So it bounces off the support level, market bounces off the support level and um take out the last lower high. So definitely that's a change in trend. That's a change in trend. According to market structure, that is a change in trend. And if you guys can see, this is a resistance line. It's also took out, like this is a major level. It took out the major level, and we are here at the moment. It took out the major level. So what I'm anticipating the market to do is that, okay, now the market has changed. This is a change of trend. The market will at least come back to retest on the major level and give us like this is an impulse move. The market will come and give us the correctional move of the impulse move. I don't know if you understand. This thing here is an impulse move to the upside. So I'm expecting the market to give us a correctional move, and also to come and test the major resistance that it broke previously. So the major resistance will now turn support at the moment. So that's it on, like that's the analysis on the daily time frame. So we are just going to go over to the 4 hours time frame now to check if it's lines not, like if the 4 hours lines up with what we are seeing on the daily time frame. So let's go over to the 4 hours time frame and see what's going on. So if you guys, I don't know if you guys can see, like on here. So this is the same thing. This is higher high, higher low, higher high. This is exactly not the best higher high. So the market came back here, like it broke the structure. You guys can see it broke the structure. I, like because the market is supposed to bounce off this level here. It is not supposed to take out this support. So the market took out this support and is currently on this level here. On the like the previous support turns resistance now. So it is currently on this level here. And if I should go over, let me go over to the daily time and to the 2 hours time frame so you guys can see the way. And if I should drop my Fibonacci level from here to here, from here to here, you guys can see that it is right on 0.618 level. And let me explain to you something to you guys, that this is a right shoulder head and a left shoulder, and the Fibonacci level is also right on that spot too. The Fibonacci level, the market is right at the Fibonacci level 0.618. So that's two confluence. And with the analysis we've done on the on the daily time frame, which signifies to us that the market is going for a correctional move, that is a retracement to to this major level here, to this major level here. Although, like I said the other time, like I said previously, that we can't actually confirm if an head and shoulder is valid until it breaks the neckline. And where is the neckline? This is the neckline. This level here is the neckline. You guys can see, like I signify it with a straight line because the market has reacted to it couple of times. That's why I signified it with a straight line. That's if you guys have been watching my trade trends episode religiously, you know that whenever I use a straight line, it means that the market has reacted to it a couple of times. And by the way, make sure you subscribe to my YouTube channel and like and comment on this video so they can recommend the videos to many more people, so many more people can get to learn from this video, and by that way you are helping my channel to grow. So yeah, like you are just giving back to me, like for breaking down the charts for you. So it is win-win for the two of us. Or what do you feel? So hit that subscribe button and comment, and don't forget to like the video too, because the algorithm is going to recommend it to a lot of people. So as I was saying, the market, we can't actually say the market, our neck and shoulder is valid without breaking the neckline. So we are just going to wait. We are not going to wait yet, because I'm going to explain something to you right there, because this is 0.618 level. If I thought the market is not going to break the neckline, it will at least come back to the 100% retracement. It will at least come back to the neckline to test the neckline that yes, I'm not ready to break. That is, I'm not valid. Or if it is ready to break, it will at least come to the neckline and break it that yes, I'm ready to break. So our next level target for this trade, for this particular trade, is the neckline, which is 1.52.000, 1.52. Like, let me take it again. The reason why we'll be taking this trade, the reason why I'm calling this trade is that this 0.61 is level, and this is the 100% retracement. So if at all the market is not going to break this neckline here, it will at least come to the neckline to test it again, that yes, I'm not ready to go all the way to the downside, but I've tested it. It will at least test it, that it will bounce off it again, because you can't really say when a market is being rejected once, it has to come back to test it, that yes, I'm sure I'm not going all the way to the downside again. So that's why we'll be taking this trade. That's a lot of conference. The first conference, the analysis on the daily time frame. The second conference, like, is the Fibonacci level. The third conference is this head and shoulder pattern, that which is forming. Although it hasn't formed yet, but it will at least come back to the 100% retracement. And the fourth confluence is that this support turns resistance. This is a support and it turns, you guys can see, it turns resistance. So definitely it will come all the way to the upside. Although we are not going to be taking this trade yet, because you have to be very, very, very careful. There's no pride in losing money. We just have to be extra careful, because we can't take any chance of losing money right away. I've lost a lot of trades, like maybe like three losing streak lately. So I'm not risking it. I can't afford to lose another trade. So what I'm just going to wait is that what I'm just going to do is that once the market opens on, sorry guys, it is probably the network provider. So once the market opens on Sunday evening, then I will just be waiting. Or whenever the market is open, whenever the pattern is on, I will just be waiting for a bearish engulfing candle. I will just That's what I will be waiting for. So if I should see a bearish engulfing candle on the 4 hours time frame, we can't take it on the 2 hours time frame to be very sure, because for a bearish engulfing candle to form on the 4 hour time frame, it means that this shit is very, very solid. That's it. So I'm just going to check potential the potential target and the potential stop loss. Although we don't know where yet, but like, I'm just going to check the risk to reward. So if at all the market is, so at least if the bearish engulfing candle should form from here, it is right on the spot. So definitely we should squeeze out probably like 1 to 2 risk to reward, which is very great if you should ask me. I've lost a lot of trade recently, so I'm just going to risk about probably like, sorry guys, so I'm just going to risk about probably like 0.5% or 1% on this trade. And if I should risk 1%, that's 2%. So I'm going to recover a bit of my losses. Then on the next trade, I will be able to risk more. I will risk more from from the like if this trade should work out, that will enable me to risk more on the next trade. But risking more because this trade seems nice is not wise enough. The risk management is not good enough. If I will be risking much on this trade after three losing streak, that means my risk management protocol is not on point. So I'm just going to risk a little. And if this trade comes in my favor, we are going to see a lot of trading opportunities that will enable us to capitalize on the trade. And we can't even be sure yet because the market from here it's will give us pullback. So during that pullback, we'll be able to enter the market and as you guys will capitalize on the trade and make a lot of profit for me. So that's it on the USD JPY. I actually have two pairs too. I will be analyzing today. So I'm just going to I won't really have much time to analyze the GPB USD, but I'm just going to be very very fast with it and explain that to you guys. So that's it on USD JPY. Make sure like if you should see a bearish engulfing candle, please make sure you take this trade, guys. I beg you, make sure you take this trade. So on GPB USD, let me go over to the daily time frame and show you guys what's happening on the daily time frame. Actually, I think monthly time frame. Oh, the time is going up. I only have about maybe like 3 minutes to explain this to you guys. So what was happening on let me go over to the monthly and weekly time frame. Sorry, guys. So I'm just going to explain from the weekly time frame. So what's happening from here? This is an higher high, higher low. This is an higher high. So the market should come here. In ideally, the market should come here to form an higher low, like based on the market structure. Like because these are higher high, higher low, higher high. The market should come to the previous higher high, the previous higher high to form an higher low as the market structure term says. So that's it on the weekly time frame. You guys, as I said, I just have to be very very fast with it. During my next trade trends episode, I'm going to analyze like very very clear to you guys. I'm going to explain it very clear to you guys. So let's go over to the daily time frame. As you guys can see, this is an ascending trend line. Like we've predicted on the weekly time frame that the ideally that the market should come here, should come to this level here, so should come to 1.28 should come to that level there. But the market is yet to reach there because of some like some things, like some levels or a couple of things. So like as I was saying, this is an ascending trend line. The market took out the ascending trend line. Like this is a daily candle. And you guys know before a daily candle will close below, that means it has actually broke it. And again, a daily candle closed below, the next candle didn't engulf it. Like the next candle is very very weak, so definitely our next level target will be 1.2800 for this. So what I'm just going to do is to go over to the fast time frame and see how we can profit of that. And you guys can see like I have a minor level I drew here. I have a minor level holding the that was holding the market that I do here. So what I'm just going to wait for, because I'm running out of time. So I'm just going to explain very quick. So what I'm just going to do here is to wait for the market to close down. 4 hours candle should close down below this level. Then I will be shorting all the way to the downside. So what's the potential target? Not really that, not something that much, but at least we'll be able to catch something. Not something too crazy, but at least we'll be able to catch something. So like I said, that it is about 1.1 raised to like one to one raised to reward, which is nice. If you should ask me, we are just going to limit our risk on this trade, guys. So that's it. A candle close below this level, a 4 hour candle close, I'm repeating, you guys shouldn't go to the lower time frame. 4 hour candle close, then we'll be selling this market. And I'm very sure that if the market should close 4 hour candle below, it is going to hit that 1.2800, which is also a psychological level. You guys know psychological levels are very, very powerful. So in my next trade trends episode, you guys see how I'm rushing. So in my next trade trends episode, I'm going to analyze everything from scratch to you guys. So thank you guys for watching my video. Please subscribe, like and comment. Peace out.